This is Warren Redlick. I'm here with Matt Smith of Good Soil Investment Management. As my audience mostly knows, I am a critic of Lucid Motors. One of my followers suggested I ask Matt to take a look at it. Matt works with Good Soil Investment Management hedge fund, and he's really into analyzing stocks. We've talked before about other stocks and Tesla in particular. So I wanted to ask Matt what he thinks about it. You can see a link to Good Soil Investment Management in the description below. But Matt, could you just give the audience a little bit of a description of who you are and how you got into this, studying investments and understanding how to analyze stocks?
My professional background was pretty much entirely in finance. So I have a degree in finance. Been really interested in investing basically since I was a kid. My dad was an investment manager, so I always was interested in kind of the stories of stocks. And then as my professional career progressed, I started off in valuation. So I really like the idea that you can value anything, just put a number to literally anything that you could think of, you can value. But I have a background in investment banking as well, and really got the kind of Tesla bug in 2017, and went all in and around 2019 or so, which was a good time to do so. Been really interested in the EV space in general. Spent a lot of work investigating Tesla, obviously, but that's led to some interest in other companies like Rivian and Lucid, and with kind of my accounting background and financial analysis background. It's been a pretty interesting journey, I think, to try to compare these companies because the differences are just really stark.
I've been a critic of Lucid Motors since something like September 2020 when they had their initial reveal. I felt that they were more fluff and less substance, and they didn't really, a lot of what they said didn't make sense. I'm not going to ask you, I don't think you analyzed the car itself, right? That's not something you focused on?
I mean, I think it's a good looking car. They've clearly done some interesting things with the powertrain. Whether you like it or not is probably a matter of taste. But when I'm looking at a business, I'm trying to think, okay, is there a market big enough to justify, the valuation? So how many vehicles would they need to sell at that price point, which they're targeting? And how realistic is that, given the competition that's out there? So when you look at the car compared to, the Model S or, some of the, or the Roadster, especially that's coming out, I think it's a reasonable question to say, is their current valuation really justified? So, and just for full disclosure, at Good Soil, we've been short Lucid in the past. We are not now, but I think we probably went on a similar journey to you, where we're looking at the car, we're looking at the financials, and we're saying this doesn't look like it adds up. There's not enough substance here, in my mind, to justify the valuation.
What do you see when you look at Lucid Motors that what are some examples of things that you see that make you question the viability of the company?
The biggest one that kind of screams off the page for me is the gross margins. I forget what it says, like minus 400% gross margin or something like that. I can pull.
You're talking about the latest financials where they spent $250 million cost of goods sold to make $57 million in revenue.
Right. So in Q4, when they started deliveries, they had a minus 421% gross margin. So, okay, on a handful of deliveries, you can kind of give them a pass there. But in Q1, they ramped up deliveries and they improved that to minus 326%. So clearly that's not a viable business model, right? You've got to either drastically cut costs, or you have to drastically increase production while keeping your costs relatively flat in order to turn the corner to positive gross margin. And so I was trying to do some benchmarking. So I looked back to, Tesla circa 2012, Q3 2012 is really the most comparable quarter to Lucid. And so you go back and say, okay, well, did Tesla have, a minus 300% gross margin, and they were able to kind of overcome that? The answer is no. If you go back and look at that, it was a minus 18% gross margin. So, still they had some work to do for sure to kind of turn the corner and ramp. But I don't know how you think about you're taking in roughly $150,000 per sale, and that implies that you're spending like $500,000 per sale. And the guidance was kind of confusing around gross margin. So if you listen to their call, one of the items that was particularly worrying in my mind was they had this inventory impairment. So they had $96.4 million of inventory impairment, which basically means They, bought and produced inventory, and they decided, or they realized that they actually can't make use of this. They had to mark down what they'd spent.
So
And
they
that's
made a bunch of
almost,
cars they had to throw away.
well, it's either cars, or it could be scrap, or it could be components that didn't work. My best guess in trying to understand how could you have that much of a write down, because keep in mind they had 58 million.
Right, they sold $58 million
revenue.
worth of cars, and you're saying they wrote down $90 million of inventory.
Yeah, 96. And so the thing that makes most sense to me is that like they're stamping metal, or they're doing some sort of manufacturing process that isn't working, and so they've got to write down that inventory. So the accounting entry would be like you bring in raw steel, you process it, and so you are writing up the book value of that inventory every step of the way, from stamping it to forming it, each machine that does some process, and each man hour that is added into that manufacturing process kind of adds a rolling cost of goods sold, that if you don't sell that product, goes into inventory. And then if you say, okay, well, this inventory doesn't work, I can't sell this, then you've got to mark it down. And so you can forgive, like I was saying earlier, a little bit of ramping issues, but they're actually guiding that this issue is going to continue. They're guiding that they're going to continue to have impairment issues going forward on their inventory, which is a really strange sort of guidance. Like, why wouldn't you just fix the process rather than just say, yeah, we're going to continue to have inventory markdowns, which I can't figure out.
Is that 96 million included in the cost of goods sold, or is it separate?
I'm pretty sure it's in the cost of goods sold. The only other place it could be is in the operating expenses. But to me, if it's going to be in inventory, that's a cost of goods sold item, almost certainly.
Okay, so their $250 some million in costs of goods sold includes $96 million in inventory impairment. So if they can fix that problem, they get closer to not so unprofitable.
Hey, so best case scenario, like if you wanted to, like, if I wanted to be the advocate for Lucid, you could back that outright and say, okay, well, if you assume they can fix this inventory issue, then how much closer does that move? And you still get into negative gross margin territory.
Right.
So like, even if they can solve that, which they're saying they can't, it's like they've still got so many other issues.
Well, they talked about, so they sold, I think it was 360 cars in Q1. Yep. And they've guided for 12 to 14,000 produced, not delivered, for the full year. And Rawlinson mentioned something about tripling. So my interpretation of Rawlinson, if I'm not off, is that they're expecting to deliver 1,000 cars or so in Q2, 3,000 in Q3, and then 9,000 in Q4, and that would get them over 12,000 vehicles. That's probably not delivered. That might be produced, but if they ramp to that extent, is it possible the numbers are just radically different in Q4 and they start getting closer to a not too bad gross margin?
Sure, and you kind of hope they do that, but it's a big ask, and that's where I think kind of looking to Tesla, because there's not a whole lot of companies that have made this journey before. Really, Tesla's the only one that has successfully turned the corner, and so that's why I think it's you have to kind of look at that benchmarking and say, okay, Tesla went from like minus 18% gross margins to now they're positive 32% or something like that as of Q1. Now that's 10 years, but they very quickly went to like from negative 18% to positive 10% or so, and they were able to sustain that for many years. I don't know how you go from minus 400%, which they were in Q4, to minus 320 to like getting to zero is a huge turning point, and then hopefully from there they can kind of turn the corner. But
their guidance from the, I don't know if they've updated their guidance since the SPAC slide deck, but their guidance was basically they expected to lose money for the first few years. And they get to around 2025 or 2026, and that's when they start breaking even or making a profit. And that's, I think 2026, they originally projected making 250,000 vehicles. And that, I think the theory would be that they get manufacturing down at some point, so they get rid of that inventory impairment. The criticism I've had for them for a while is they're spending $1 million a car and they're selling them for 150,000 or 200,000, and I'm off a little bit on my numbers, but that's about right.
it sounds kind of similar to the criticism that Tesla used to get when people would say, "Oh, Tesla loses money on every car they produce." But the really important distinction is that the Tesla bears, circa 2018, were using net income divided by deliveries, which includes operating expenses and interest expense and like all those sort of things which are relatively flat as you ramp up production. This is on a gross margin basis that we're talking about. So we're saying like, ignore the fact that they're probably too bloated as it is on the operating expense side, but just their actual gross margin of selling the car is too high. And when you listen to them, go ahead.
No, just so people understand what you're saying, part of the cost of operating the company is the materials and the labor that it takes to make the car, and part of the operating cost of the company is, I don't know if I'm using the term operating correctly, but part of the costs of the company are the labor and materials to make the car, and part of the cost of the company is having a home office and having infrastructure. And when you scale production, those costs either don't rise or don't rise very much. And so if you can scale production, those costs become a much smaller component of the cost of the car. And if you can make the car for less than the cost of the goods and the labor, and then you make enough of them, then you can actually become profitable. If your cost of making the car is always more than the price you're selling it for, then you're never going to make money, leaving out the administrative costs. But so, I mean, I guess the hope is that they manage to get rid of this inventory impairment cost, whatever it is. My impression, I got a call from a person who claimed to be an insider at Lucid. And I can never tell whether because I've had a couple of these calls, and I can never tell whether these guys are telling me the truth or lying. So I just want to disclose right now what I'm about to say. I've not verified this. But the guy said that, the place is a mess, that workers are sitting around doing nothing half the time, that they don't have the equipment to manufacture in volume. They haven't outfitted the inside of the factory to be able to manufacture at scale. They don't have, when you're going to ramp, what you want to do is you want to have all your robots and all your equipment, and you have your line set up, and then you're figuring out where the bottlenecks are so you can improve manufacturing. And this guy said that there was not a supply chain issue. The claims about supply chain are false, that they got plenty, because they're not making that many vehicles. And because they're so high priced, they can bid more for materials. Whatever the components are that they need, they can outbid anybody else because they're selling a $160,000 car. You can pay more for that component than the next guy selling a $50,000 car. So, and they don't need that much volume in terms of supply. So whether this person is telling me the truth or not, whether this is genuine, I don't know. But the picture I got was that they haven't really fitted out the inside of the factory to be ready to manufacture at scale. And, Lucid claims that's what they're doing, but you really, I can't know whether that guy's genuine or not. I'm guessing you don't have people calling you from Lucid Motors feeding you information, and there's nothing really in the numbers to show us that, right?
Yeah, we've talked on our channel a little bit more about Rivian, but we've had similar kind of unverifiable reports of similar issues there. So I mean, it sounds reasonable. I mean, when you're looking at the financials, I mean, it paints a pretty ugly picture.
Does the CapEx support? Because one of the things I noticed was, it seems like Lucid is not spending as much on capital expenditure. Capital expenditure mean like building factories, paying for equipment that goes in the factories. It seems to me that they're not spending enough on CapEx. Like they're spending CapEx on building a second factory building, right?
Right. That's the wrong problem to solve right now.
Well, yeah, I mean, they should be spending CapEx on getting the right equipment to manufacture their vehicles efficiently at scale. And we can't know what's inside the factory. One of my criticisms of Lucid from September of 2020 on is they show you what they want you to see, but they don't let anybody in. They don't let any journalist inside the factory to see it when it's actually operating. Right? They never let anybody inside. For all we know, they just I think there was like MSNBC or CNBC did this video from Lucid, and it was like Lucid shot the video and supplied the video to them. Like no journalist has actually been inside their factory, as far as I can tell, to know what's going on inside.
I mean, that's definitely been one of my concerns and criticisms as well. I mean, the thing that they probably rightly take a lot of pride in is their battery powertrain. And so if you listen on the call, Peter Rawlinson was talking a lot about how they've got this great cost saving efficiency of their battery, because their battery, you can use fewer kilowatt hours in order to get, a same amount of range. So there's a cost saving there. And he spent a lot of time talking about that. I'm like, okay, that's a great point, but do some math. Okay, so let's say you've got 100 kilowatt hour battery and you can save 10 kilowatt hours off of that. Well, even if you're assuming $200 a kilowatt hour, which is not how much it would be, that's too high. You're talking about like $2,000 of cost savings on something
$160,000 car,
which you're spending $500,000 roughly, like on cost. So it's like he's spending so much time talking about saving, a penny on the powertrain, which is what like most people kind of anchor their costs with EVs on, like, oh, batteries are too expensive. The whole rest of the manufacturing process is really the problem, and they didn't really talk about that at all.
Well, if you're making a $25,000 car, then a $5,000 battery pack's a big component of the cost.
Yeah. Yep.
But if you're making a $160,000 car, then a $20,000 battery pack isn't as big of a deal. And
exactly.
So, okay, well, so let me bring this up, and I don't expect you to have an answer to this question. One of the claims is that they're using a 118 kilowatt hour battery pack, and they're getting 500 plus miles of range, or 112 kilowatt hour battery pack in the Grand Touring, and they're getting 500 miles of range. And I've been critical of that. And there was a video, I think it was Tom Maloney charged a Lucid Air at an Electrify America or one of those DC fast chargers, and he put 134 kilowatt hours into the car. And I've said every way I've done the math 4 different ways, and I come up with 138 kilowatt hour pack. That I think they're lying about the pack size. And one of the things that stands out is that the car weighs several hundred pounds more than a Model S long range. It weighs more than I think it weighs more than a Model S Plaid, but it weighs several hundred pounds more than a Model S long range. And if you're more efficient, they keep making all these claims of efficiency.
Right.
Well, if you're so efficient, why does the car weigh so much? I don't understand. And this is one of my criticisms is no journalists, that there's official journalists that they'll actually take questions from. No journalist asks them that question. There's some glaring, obvious questions. You keep saying how efficient you are, how your power weight ratio is so good. Why does the car weigh so much? And no one asked them that question.
That's a really good question. I don't know the answer to that. I'm curious. Has Matty Mogul done the core efficiency rating on that? Because he's done some good kind of benchmarking. I don't know if you follow his work.
I haven't seen his numbers, but you can calculate it. It's pretty good. I mean, it's very good core efficiency rating because it's heavier car.
Right.
So
right, but it should go the other way, right?
Well, if you're doing, I mean, look, if it turns out that I'm right and it's a 138 kilowatt hour pack or 134 kilowatt hour pack, then all these things, and listen, I've been very critical of Rawlinson. Rawlinson very clearly lied before the SPAC merger. A week before the SPAC merger was announced, he said Lucid was going to make 6,000 cars in 2021, and they were going to start deliveries in the spring, right? And then the SPAC merger was announced, and all of a sudden they're down to 577 cars delivered for the year 1 week later. There's no way he didn't know he was lying a week before.
Yeah.
The due diligence involved in carrying out that transaction had to be longer than a week. And he's describing he's describing some conversation he had with Alan Mulally, who's on the SPAC merger, the SPAC company.
He's a very legitimate executive, by the way. Did some really great
Alan
things.
Mulally never spoke, right?
Oh, interesting.
Rawlinson said what Alan Mulally said, and Alan said, hey, we got to get the car right. It's a great car, but we got to get it right. And journalists should be saying, well, what did Alan think was wrong with the car? Right. And when did Alan say this? Did he say it more than a week ago? When did this meeting happen? When did this conversation happen? And no journalist is asking the right. I give Ed Ludlow from Bloomberg credit because he got some of this out, but he didn't. To my mind, he didn't ask questions with a critical eye and say, "Wait a minute, a week ago you told Fox News or Fox Business or whatever that you were going to deliver 6,000 cars this year. When did you have this conversation with Alan Mulally?" And maybe you don't lead with that, but you ask the question, and what I find with Rawlinson is I just find the guy fundamentally dishonest. And this is the thing, you lie to me once, I'm not going to believe you ever again. If you open up and you say, listen, I was overly optimistic here. Here's what I was trying to do. And you come back and then you show me, like, you open up the factory and you let people, because, Tesla gives people factory tours. I don't think they're giving factory tours at Fremont anymore, but Elon was always letting Jay Leno in the factory. He's letting other people in the factory. They got cameras walking through their factory. I don't think they do it at SpaceX as much, although he just had Everyday Astronaut. Tim Dodd I don't know if you follow at Tim Dodd.
Yeah, he just had Everyday Astronaut. Yeah.
He just had
I just watched
around
that yesterday. That was phenomenal.
Yeah, and that's not the first time. Won't let me on the property, but he let Tim Dodd on the property. Okay, I'm cool with that. Tim deserves it. So
Tim's questions, watching that, I'm like, wow, I don't know nearly enough about rockets, because Tim is asking all these super complicated questions about point of I'm just like, wow, I've watched all those. I've been studying this area for a long time, but yeah, his questions are phenomenal.
Yeah, it's frustrating watching like mainstream interviews of Elon, because they just don't ask good questions, and you're like, I wish Tim Dodd was on that stage asking him. I'm still mad at Tim for not asking about the next rocket engine after Raptor. I don't know if you saw that Elon tweeted. I know we're going off topic of Lucid for a second, but Elon tweeted a while ago that they need to come up with a new rocket engine to make life multiplanetary, and it won't be named Raptor. Like,
I think
that was like several months ago. He tweeted that, and no one has asked him what's the next engine after Raptor 2, because they're working on something. He said that they've got, Starbase. I think McAllen, Texas, is building Raptor 2, and back at Hawthorne, they're working on the next generation rocket engine, and no one's asked him what's the next generation rocket engine.
Yeah, that's interesting. I'm speculating a little bit here, but I would imagine maybe something which prioritizes thrust a little bit less could be beneficial, maybe a longer ISP and lower thrust, because one of the major issues with Earth is that it's just barely possible to get off because of Earth's gravity is so high. But if you're leaving Mars, you don't need nearly as much thrust. If you're leaving the surface of the moon, you don't need nearly as much thrust. So maybe there's some sort of non-Earth leaving rocket ship.
Elon was talking in the interview he just did with Tim Dodd. He said thrust to weight ratio is really important.
Well, for reusability on Earth, that 1.4 thrust to weight is incredibly important. But when he's talking about going beyond Earth and making interplanetary, maybe there's a Mars to the moon route, that makes a lot of sense, and which would have presumably you would want something designed different than the Raptor, because the Raptor is designed to just like get a huge mass outside of the incredibly heavy gravity pull of Earth.
It could be that the vacuum engine is going to be completely different from the sea level engine. That would make sense. All right. Anyway, getting back to Lucid.
Sorry. Yeah.
No. I think I took us on that path.
So I love going down that space. I'm super interested in that sector as well. But I wanted to piggyback actually on what you were saying about Peter Rawlinson, because I kind of get the same vibe. One of the things in our fund, Good Soil Investment, that we really look to for any investment that we're going to be making a significant bet on or investment in is, who's the founder? Is the founder like a transformational kind of visionary? And when I hear Peter Rawlinson talk, I kind of get the heebie-jeebies a little bit. And it's something I can really pin down, but listening to him on the Q1 call, it sounds to me like he doesn't even believe what he's saying, and he's like narrating a movie, and I can't put my finger. I could well be off on this kind of judgment call, because that's admittedly what it is. But I just don't trust him when I hear him speak.
He's got the British.
I feel like he doesn't.
He's got the voice of a British movie villain.
Yeah, it's like his voice. Like on the surface level, he sounds kind of nice. If you don't focus on what he's saying or think about it too much, I like his voice. But it's like I've almost learned to distrust a British accent because it sounds so nice on the surface.
Yeah. No, I just feel like I always feel like everything they do is a dog and pony show. We're showing you what we want you to see, and we're not showing you the stuff we don't want you to see. But let me turn to a different concern I have when I look at Lucid.
Sure.
So let's suppose we're both wrong, and they're going to be able to manufacture Lucid Airs at scale. Okay, they're actually going to be able to scale production. They're going to be able to get to the point of some degree of profitability, some gross margin that's positive at some point when they're making $100,000 a year, let's say. Is there a market? And if you look at their SPAC slide deck, they're projecting, let's say 2025, they're going to sell 100,000 vehicles with an average selling price, when you look at the numbers, of about $110,000.
Mm-hmm.
How big is the market for $100,000 plus sedans? I think that includes Project Gravity, but Project Gravity's been pushed back. I don't know what share is the SUV and what share is the sedan, but what is the what is the market for high-end sedans, for starters? Because Lucid Air is the car they have.
Not gigantic. I mean, it's not the sort of thing that you can just continue to scale exponentially. I mean, if you look at, I think the best kind of comparison is Tesla, which is producing the Model S and the Model X, right? So that's roughly analogous, and they're capping production of those at 100,000 vehicles per year. I mean, that's the installed capacity out of Fremont, right?
I think Elon said they might get more than that, but yeah, I think the hope is by the end of this year they'll be at a run rate of maybe 25,000 a year.
Yeah,
between
but
the
that's
two of them. 25,000 a quarter between the two of them.
Right. Yeah, the installed capacity is 100,000, so they always produce a little bit less. Maybe they'll ramp that up, but I mean that's a good benchmark, I think, for a highly successful, electric sedan and SUV priced at a premium.
Right. But I would leave out electric. I think the question is, you've got the Mercedes S-Class. Lucid Air, to be fair to Lucid, they're often compared to Tesla, and they're often, they're called a Tesla killer or whatever. But I would give Rawlinson credit for this, although he'll hint at competition with Tesla. His target has always been the Mercedes S-Class. Not the EQS, but the gasoline-powered or diesel-powered Mercedes S-Class has always been the target of Lucid Motors. And I don't know the answer to this question. How many S-Classes does Mercedes sell a year? I don't think it's, and you could include the BMW 7 Series, you can include the Model S, and you can include the Taycan or the Porsche Panamera. There's a certain group of luxury sedans, probably one or two more that I'm like the Audi A8 or something like that. There's a certain group of sedans that sell for 100,000, or a ballpark of 100,000 plus. I don't think the market is that big, and in order to get to the numbers they're talking about, they would have to basically get like a 90% market share.
Yeah, I mean, I think you're right. I'm just doing a quick, search, and I've got U.S. sales of the S-Class was in 2021 was 14,000. So maybe worldwide it's closer to 30 or 40,000. But yeah, and then if you say there's a couple other competitors, you maybe triple that. So maybe 120,000 is the total kind of addressable gasoline market.
Well, and the S-Class is a particularly large vehicle. And when you talk about European roads and Japanese roads and Chinese roads, they're often concerned that like the Model 3 is too big.
Right. Yeah.
And the S-Class, the Model S is bigger than the Model 3, and the S-Class is a really large vehicle. People don't appreciate how big the S-Class is. It's much longer. I think it's a little bit wider. I don't know if it's wider than a Model S because the Model S is pretty wide, but it's just sort of awkward on European roads. I mean, I'm sure they sell S-Classes in Germany, but my gut hunch is the United States is the ideal market for the S-Class because we have big roads. We have wide, spacious roads mostly.
Yeah.
So, yeah, I mean, you take the S-Class, you take I just don't think and then if they come up with Project Gravity, which they've now pushed back to 2024 at the earliest, this is the other question I have. So on their SPAC slide deck, they're getting to this point where they're generating a certain amount of revenue and they become profitable at a certain point. And this is, I think, a big distinction between Lucid and Rivian. Lucid's cash pile is somewhere between 5 and 6 billion, I think. And their cash burn rate, they're going to be, assuming they're going to grow, they're probably going to increase their cash burn rate. And they've said themselves they're going to be out of cash by like Q2 of 2022.
23.
Does that, and the contrast with Rivian is Rivian has a much bigger cash pile.
Yeah, Rivian's got a much higher cash burn rate too, though, to be fair.
Rivian has a higher cash burn rate. This is the distinction. Rivian is spending its money on CapEx now, right? And presumably their CapEx will decline, and the hope is they're going to increase production, and they're going to start generating a lot more revenue. And once you get your CapEx out of the way, you can start becoming more profitable more quickly. Lucid is sort of it seems to me Lucid is holding back on CapEx, and that's going to be part of the problem. So what do you think? First of all, I'm not even going to ask you. They've said their cash is enough to hold them into 2022 or
2023.
2023.
Yeah. They said well into 2023, I think is what they said.
Yeah. I think it's Q2. At best, they're out of cash. So they're going to have to raise cash somehow. They don't have a projection. They're not saying we're going to become cash flow positive by in
No.
time we'd run out of cash. So where are they going to get cash from in today's economy? What do you think about that problem?
One of the reasons we got out of our short was because they have this relationship with Saudi Arabia, which is got, for all intents and purposes, like infinite balance sheet. So the most obvious answer, I think, would be Saudi Arabia, but at the same time, the Sovereign Wealth Fund, the PIF, I think it is it's not like, they're not dumb. They're not just going to continue to sink money into a losing proposition necessarily. I mean, they're doing a lot of things to support it. They've got this 100 or 50,000 guarantee order from Lucid, so it stands to reason, I think, that they'll try to help it along. But at the same time, you have to look at where the market is today versus when they listed via SPAC with Churchill, and it's a drastically different market. Like their valuation, I mean, you can already see has been shredded. Along with everyone else. So if they do raise more, it's probably going to be highly dilutive to the existing shareholders.
Well, there's two choices, right? They could issue shares, and then the question is the public market going to buy stock, or are the Saudis going to buy more stock? Or they could borrow money. Interest rates are really high right now. Do the Saudis give them a low interest rate loan? If they do a loan from the Saudis, what does that do to their interest expense in the future? They've got, I think the Saudis probably are willing to float the pig for a while longer. The other theory, let me just bounce another theory off you. Suppose the Saudis let it go under and they file for bankruptcy, and then the Saudis buy it out of bankruptcy.
That's what I would do if I were them, to be honest with you, rather than
replace the management team. And, if the factory in Arizona isn't working out, you would just bring the equipment to Saudi Arabia and build it, build your own factory in Saudi Arabia, which is, maybe their plan, which I think is let me ask you about that. They had this plan to build a factory in Saudi Arabia to produce 150,000 vehicles a year. I don't think where are those cars? First of all, is there a supply chain? Is there a labor force? How do you get
that was my question as well. Like, there's no history of very large scale manufacturing projects outside of like oil refining in Saudi Arabia. Now, granted, they're very good at that, so maybe they think they've got a handle on how to handle kind of large manufacturing processes. But just from a logistics cost point of view, both inbound and outbound, you're going to take steel from, I don't know where maybe Korea or somewhere like that would be
India. My gut hunch is that they bring in workers. I think Saudi Arabia already brings in workers from India.
That's true. That's true.
You bring in workers from India, and maybe you get your steel. Maybe you have India become your supply chain, but I don't know that I would consider India a reliable, because India is not that far from Saudi Arabia.
Yeah.
But I don't know that I would consider India a reliable supply chain.
Well, especially when I don't know if you saw the news this past week, they just banned exports of wheat, I think it was, from India, kind of in response to this, Ukraine war situation. So that was, a pretty drastic policy change. Now, maybe they don't rely on India, but it seems like, wherever they're going to get both raw materials and workers from, they're going to be moving them quite a long ways, and then you've got to ship the cars to the ultimate market, because I'm pretty sure there's not 100,000 vehicle market in Saudi Arabia.
Right. The Saudi order is, as I read it, one of the things they claimed it was up to 100,000. As I read the press release, it's actually a maximum of, it's around 60,000. It was like up to 7. It was 4 to 7,000 a year in the later years. Well, I don't know how you get to 100,000 with 7,000 times 8 plus 2,000 times 2.
Yeah, it was ramping up to it was some number less than 10,000 a year, I believe. It
was 7,000 a year. Was the first 2 years was 1 to 2,000 vehicles a year, and the last 8 years was 4 to 7,000 vehicles a year. Like, well, if I go 7,000 times 8, I get 56. And then I add the 4 for the first 2 years, I get 60,000. Where do you get 100,000 from?
It was a guaranteed order of 50,000 and an option that the Saudis have to buy an extra 50.
Yeah, but even the guaranteed order, 4 times 8 is 32 plus 4, you get, it doesn't add up. it doesn't add up. But, let's suppose you're going to get 10,000 a year from that Saudi order. You're going to make 150,000 a year in your factory. Where'd the other 140,000 vehicles going?
That's the point. I think is like these numbers. I don't think trying to scale in this current market segment is the right move. Now maybe I'm wrong. It's very possible I'm wrong because Tesla within that class, it's a very different buyer than you or I, Warren. You know, where like the stripped down Tesla, you know, around $50,000, $60,000. That's like a more reasonable, you know, vehicle for the majority of people. That's, you know, maybe even a stretch for a lot of people. But buyers of the $100,000 plus segment, a lot of them don't like the minimalism within Teslas. So it's possible that there are a lot of, you know, ICE premium luxury sedan sales out there that sure they'd like an EV if they wanted one, but they want the premium leather. They want, you know, whatever, all the crazy knobs and dials that I think are so ugly. So it's possible that they're more successful in converting them, but it seems like a stretch.
This is another challenge for them is, as I understand it from the SPAC merger, when their numbers in the SPAC merger, the vast majority of their orders were for the Air Pure, which is, I think at the time was like 77.
It was like 78 or something like that.
77,000, 77,400, something like that. It was a $77,000 or $78,000 vehicle. If it's costing you $400,000 or $500,000 to make a $160,000 vehicle, how much is it going to cost you to make an $80,000 vehicle? How are you getting the cost? Because the battery pack, okay, you get the battery pack from 118 kilowatt hours, 112 kilowatt hours. You go down to an 80 kilowatt hour pack. That doesn't save you a lot of money, right? Yeah. You're going to have to decontent in some way. You're going to have to use cheaper leather, or you're going to have to, you know, where are you getting your cost savings on the Air Pure to be able to deliver that vehicle for $80,000 when you can't make money selling a $170,000 vehicle?
Yeah, well, their backlog is only 30,000 units right now. So their backlog is much smaller than their planned production capacity. So they've got a lot to prove in my mind to say, not only can we produce the vehicles currently in our backlog, but that backlog figure should be growing substantially quarter over quarter. So one of the things I'm kind of curious to look out for is, do they keep reporting that metric? And if they don't, I'd be pretty concerned.
Do you get Lucid ads?
No.
I get Lucid ads on Twitter and Instagram all the time, and YouTube, I think. I'm constantly getting, because I talk about Lucid a lot.
Yeah, it's probably, I don't talk about them as much, and I do YouTube Premium. I really, that's one of the few paid for services I think is really worth it.
I might have to do that. But I just noticed that I see a lot of Lucid ads, and I think it must be that they're really, like, you would think they would say, don't show Warren the ads. Yeah. No way Warren's going to buy this car. But you can't get that micro when you're doing that ad campaign. But they're advertising heavily from what I can see. And they've got their storefronts, I don't know, 24 different storefronts or something like that, and they only have 30,000 orders? I mean, Cybertruck has like 1.5 million orders. And they haven't advertised it at all.
Yeah.
They haven't really fully disclosed. They sort of claim that there was a shift in orders more towards the high end. And again, I think they're lying. I think the vast majority of their orders are for the Air Pure. And, the other interesting thing, I don't know if you caught this, was they decided to come up with this new model, the Grand Touring Plus or something like that.
Yeah.
That they're going to sell for $180,000. And basically what they said was, well, they had demand for the Dream Edition. They ran out of Dream Editions. So now they're making this new car they're going to sell that's basic. What's funny is they claimed like this, because of their talented engineering team. And I'm looking at it like, it's just the Dream Edition. You changed the horsepower a little bit. You tweaked it a little bit. It's the Dream. This wasn't sophisticated engineering at all. You just took the Dream Edition. You changed the badging. And you changed it from 1,100 horsepower to 1,050 horsepower. And, in a way, you're undercutting all these people who bought the Dream Edition, right? Because now you're going to sell this vehicle that's basically the Dream Edition, and just change the label. So they thought they were buying an exclusive vehicle, and now it's not that exclusive anymore.
Well, they probably need to reprice these cars anyways. This is one of the things I think a lot of the auto industry is struggling with right now. I mean, Rivian was talking about this quite a bit on their call, and they frankly really bumbled through the price increase that they tried to introduce. But when your gross margins are as atrocious as Lucid's are, you have to raise prices, and we're in this extreme inflationary environment. Everything's costing more. So you were quoting prices years ago on a lot of these reservations that they've committed to honor these prices.
Right.
So I think it's reasonable to presume that future editions are going to have higher prices, which actually kind of cuts against what was in the spec deck, because they were saying they're going to kind of go down market a little bit to get that average selling price down closer to like $100,000. Well, if you look at the reality of where we are in kind of this macroeconomic environment, you're almost certainly going to have to raise prices, and so then that makes the target of drastically increasing production to even just the $34,000 or 34,000 unit target. That's kind of the current focus. That's going to be hard on an annual basis once you get through the backlog, but then to ramp it up to 100,000 units plus in the longer term.
Yeah.
I don't know how you do that.
Oh, I was going to say about Cybertruck, one of the things I think that Tesla's done that's brilliant is Elon said, the first Cybertruck will be a quad motor.
Oh, yeah.
Nobody has a reservation on a quad motor. And they're going to go to the people who have the tri-motor and dual motor reservations, since I'm a dual motor reservation. I actually have 2 dual motor reservations. They're going to say, hey, listen, we're not making the tri-motor yet. We're not making the dual motor yet. If you want the quad motor, you can get it next week or 2 months or whatever, but we're going to charge you $120,000 for it. And there's a lot of people who will pay $120,000 for it, because I'm paying $140 for a Plaid Model X coming in maybe July. I think the quad motor Cybertruck's better than a Plaid Model X.
Yeah,
I mean, it might not be as luxurious, but it's going to have 4 motors instead of 3, and it's going to have a lot more cargo capacity, and it's going to be bulletproof, and it's cool, and it's going to stand out, and it's going to be distinctive and all that. So you figure out of 1.5 million Cybertruck orders, you can probably easily get 150,000 that will pay for that quad motor. And, then you get to the point where, like, they may decide we're not going to deliver a tri-motor because the quad motor is a better vehicle. And then maybe they come to the dual motor later, they never get to the single motor, and they go to the dual motor people and say, all right, we've got a new version of the dual motor that's better than what we said, but you got to pay 75 instead of 50. And they peel off the buyers to get away from the people that are going to get shorted. And at a certain point, they say, hey, you know what? Inflation hit. There's no way we can deliver these cars at these prices. Or they take the hit and they deliver the cars at those prices. I don't know. What do you think Tesla does on delivering Cybertruck at the prices they said a couple years ago?
Well, I think so. Maybe a year ago, I actually read through the delivery agreement in some detail. So I may be getting some of these details slightly off, but my recollection of it is that the only guaranteed item in there was the full self-driving price. So if you did lock that in, they are legally obligated to honor that. But I believe if you read the fine print on the configuration and everything, it said something to the effect of final trim details and pricing will be subject to further change, or something like that, which I think makes sense. I mean, you don't want to lock in like 1.5 million orders at negative gross margin prices for something that you just can't predict what the prices are going to be, 2, 3, 4 years. Because they introduced that in 2018, wasn't it? So it's going to be,
maybe it was 2019. I'm not
maybe
sure.
It was 19. Yeah. But so 4 or 5 years before the actual deliveries start to occur, it's frankly irresponsible to guarantee those prices when you haven't done that yet.
Guarantee the FSD price, because that does that's basically a near zero cost. No, and I ordered a second Cybertruck when the FSD was only 8,000 and it was about to jump to 10,000. I was like, screw it, I'm going to order a second Cybertruck just for the hell of it.
I got 21.
And figuring I'll get that one like 3 years later than the first, because I'm one of the early orders on the first Cybertruck. I ordered in the first hour. So,
oh wow, you're really early. You were in the crash the website group, weren't you?
Close, yeah. No, I'm actually thinking that, like if they, I ordered a $50,000 dual motor with a $7,000 FSD package on the early order, and I'm like, if they came to me and said, Warren, it's going to be $80,000 for your dual motor, all right, I'll take it. I actually think the other thing they do with the dual motor is they say, we've decided to offer an extended range dual motor. Right? So the regular dual motor is going to be, 300 miles of range, but the extended range is 400 miles of range. And it's $15,000 extra or $20,000 extra for the extra 100 miles of range. And we're delivering those first. Right? So you peel off a lot of buyers who are angry, who are going to be angry about the price increase. You peel them
Yeah.
off first. And then
Well,
ultimately you make a decision about how you're going to deal with the people who you told them you're going to charge this much for it, and you figure it
yeah.
out. And I do think their manufacturing cost is going to be significantly less on Cybertruck. I think they've figured out how to make it a lot cheaper. So if they are able to get the cost of Cybertruck down, they might still be able to deliver it at not at close to a profit at the prices they
Yeah.
said.
Yeah, well, I mean, they've done this before. I mean, a lot of what you're talking about has either been done before or they're doing it now. So, like I had a Model Y rear-wheel drive reservation a long time ago, and they ended up just canceling it. So they called me and said, we're not making this variant anymore. Would you like to upgrade to the dual motor, or would you like to cancel your order? And so, there's no kind of guarantee that your pre-order configuration and or pricing is going to be set in stone. And then if you look at the way they're prioritizing orders right now, for pretty much any Model S, Model X, Model Y, whatever it is, the higher trim versions give you an earlier delivery date.
Right,
so they're trying to incentivize, higher ASPs and higher gross margins.
Yeah, no, and
they're using delivery date.
To be fair, I ordered a Model X Plaid with a 5-seat configuration because I wanted to be able to fold down the second row and be able to sleep in the car. And they decided to only deliver 6-seaters where you can't fold down the second row. Unfortunately, you can fold down the third row, but not the second row. And it's a $6,500 option that I didn't order. And they said they're throwing it in. The document I got didn't say it, but the phone call said when you get to the point of you actually have a VIN number, call sales, and they'll reduce the price back to your original pricing. So they are, and I'm sure they're still making money on the car, right?
Yeah.
I bought it. I'm paying $10,000 for FSD, and I bought like red paint and white seats. I decided if I'm going to buy this thing, I'm going to spend money on it. This is an incredibly stupid purchase on my part, but I'm kind of operating on the theory I'm buying the Model X Plaid. I'm going to drive it until Cybertruck comes, basically. And then I'm going to sell the Model X Plaid, and I'll probably sell it at a profit.
So it's a reasonable assumption, honestly.
Well, I mean, I ordered it for, the base price was 120 when I ordered. The base price is 140 now.
Yeah.
Right? And when I'm ready to sell it, there might be like a 6-month wait to get the vehicle you want. And you can get mine today.
Yeah.
And maybe the price will go up again. Right? So you can buy mine for 150 today, or you can wait another 6 months to get that one for 150. And mine will be in good condition. I'm going to take care of it.
I mean, the residual value of these vehicles is so phenomenal. Now, like the entire automotive industry is at kind of elevated used car prices right now, but I think it's very clear for Tesla that there's something different going on.
Well, no, and I put $10,000 for FSD on this particular vehicle. What's FSD going to be worth in a year?
What do you think about that? I'm genuinely curious. Like, where do you think it's priced in a year's time, based on what you're seeing with driving it?
Well, I mean, if FSD goes into wide release and it's safe, if it's safer than human by the end of this year, then it's worth $100,000, right?
Well, if it can do it without you paying attention, right? So I think there's maybe a distinction between being safer than a human, but you still need to oversee it in case it does something stupid.
Yeah, no, that's what I'm saying is I think that, like let's say a year from, I'm taking delivery in July, let's say, and maybe I get my Cybertruck in March, in my dreams. In my dreams, it's Q1 2023. It probably won't be that soon. But,
Elon's sandbagging, you're hoping.
Well, I'm hoping they're sandbagging. I'm getting it in December of this year, but if I'm ballpark right, so let's say it's March or April of next year. If they're going to be safer than human by the end of this year, where are they going to be in April of next year? I think it's going to be at least $20,000 for FSD by the time I'm ready to sell it. So, and how close are you to the robotaxi world? Now, I don't think Model X Plaid is an ideal robotaxi.
I don't think so either.
I mean, maybe you get a premium price for the ride. I don't know. But, if I'm calling for a robotaxi, I don't care whether I'm riding a Model X or a Model 3 or whatever. So anyway, All right, so let's go back to Lucid. So go on these divergences. So the path going forward, sometime next year they have some kind of event where they either borrow money from the Saudis or they do some kind of funding round, and it's dilutive to existing shareholders. How much do you think they can? I mean, because they've got to raise a lot of money. It's not like they just raise. It's what's funny is they could have done a funding round with equity last year when they raised they did like a $4 billion bond round or something. I forget how much they raised with a bond. Maybe it was a couple billion. They could have done a funding round with equity and raised a ridiculous amount of money, and they didn't do it. And they were bragging about how they were making the right decision by borrowing instead of issuing equity, and I think it was a terrible decision, especially looking at stock prices now.
It was absolutely. I mean, when you're in that super risky period of ramp, that's like the right time to be making equity investment or to be making or doing equity raises. Like financial theory basically kind of indicates that you don't want to increase the bankruptcy risk of your company so drastically by issuing debt before you've kind of got a handle on your cash burn. Because they're in this situation now where not only are they, losing money on the gross margin, so just like their actual manufacturing sales, like we were talking about earlier, on top of that, they've got pretty significant, I think it's like $400 or $500 million of operating expenses per quarter. So that's another drag on your cash burn. Then now you've got to pay back interest expense and some principal at some point, and you're running out of cash in 1 year. Okay, well now you got to hit the equity markets, and your valuation's cut in half, or however much it has been since they last raised the debt financing. And it's so then it becomes very clear that you absolutely should have raised equity rather than issue debt.
It's easy to say that now, looking back on things. I mean, maybe it wasn't as obvious then, but let me turn this to Rivian. So when I look at Lucid and Rivian, the big difference I see is the cash pile. I mean, there's other differences. Rivian has delivered more vehicles. Rivian has a better niche. There's a much bigger market for pickups and SUVs than there is for luxury sedans. Where do you see? What are your concerns about Rivian going forward?
I'm very concerned with Rivian's cash burn. I mean, they've got a very large cash pile, like you said. So they're sitting on, as of end of March, they had $17 billion in cash.
Yeah.
But they were burning $1.5 billion per quarter. So you say, oh well, don't. They're fine. They've got a huge cash pile. Well, that cash pile at their current rate is only going to last them about 3 years.
But that's better than Lucid.
It's better than Lucid, but they've also got worse margins. So they've got minus 500% gross margins, so slightly higher than that.
Okay, fair point.
And the biggest issue I see with this company overall is that I think they got fat and happy on all these capital raises and like the Amazon partnership and the Ford partnership. They had all this cash coming in. I think they really built up their operating expenses too much. So last quarter they had 1.1 billion of operating expenses, and they delivered just over 1,000 vehicles. Tesla, delivering 300,000 vehicles, had operating expenses of $1.8 billion. So it's like Rivian's at least in the same ballpark of kind of overhead cost that Tesla is. They're a little bit smaller, but it's like they've fattened up to the point where Tesla was, I don't know, circa 2019 or something like that, despite having delivered very few vehicles. So it seems pretty clear to me that they need to really be, belt tightening and doing something about this insane cash burn that they have. But they don't seem to be doing that.
Well, this is my theory, okay? Because they said aren't they building a second factory?
Yeah. Yep. In Georgia, I think.
So my theory is they've decided while we've got the cash, and while there's sort of this lull in the market, let's build out our manufacturing capacity so that 2 years from now we're going to be able to produce in much higher scale and really serve. Because I think if you look at the pickup truck market, Cybertruck's coming in. But I think between Ford, GM, and Dodge, I think they're something like 3 million pickup trucks a year in the U.S. alone.
Yeah.
So Cybertruck's probably not going to be more than 500,000 a year produced. I think my gut hunch is that Cybertruck is going to scale to 500,000 a year in the short to medium run, in the next few years. I don't think they get to 1 million a year produced for a while, and I don't think they're even planning to produce 1 million a year. I think Elon said, we've got like a 3-year order backlog on Cybertruck. Well, if they got 1.5 million orders, that's 500,000 a year.
Right. Yeah.
So there's room for Rivian, and Rivian also has this sort of distinctive like off-road capability that is, it's a good vehicle in a lot of ways. What do you think of the vehicle? What do you think of the R1? The R1T is the pickup, the R1S is the SUV.
Yeah.
What do you think of their vehicles?
I really like them, honestly. I think they look great. I think you're right. They've got a really interesting niche there. I mean, you see like Jeep and Land Rover, and it kind of fits in that kind of outdoorsy niche, which I think is great. Like they've thought about their brand. So I think they'll do well. Can they produce hundreds of thousands of them a year? I don't know. But what kind of gets me concerned a little, well, actually, I should say we had two Rivian bulls on our channel, did like an interview, because Emmett and I have been very vocal in our kind of critique of Rivian, and so we want to say, okay, what's the bull case that we're missing? And we had these two folks on the channel. They're saying how much they loved their cars, like, yeah, they had to raise prices on them, but this one guy's like, I would have paid $2 million for mine because it's such a great vehicle. And I'm just like, but we asked them at one point, we said, like they've got this issue with their margins. They're spending way too much money on each vehicle that they're producing. One of the things we loved about Tesla was that Elon was out sleeping on the factory floor and doing whatever it took to kind of figure out the manufacturing process. Like, do you think RJ Scaringe is that kind of leader who's going to realize the severity of the issue he has and burn the midnight oil to solve it? And the two guys, I forget which one said it, but one of them was like, yeah, like he's probably a little too bougie to do anything like that. And I thought that was
oh my God,
a little telling. Like, he's very comfortable in like, the capital raise situation. He's very comfortable,
right,
talking to investors and doing fancy events. But like, what you really need is somebody who's going to roll up their sleeves and figure out the manufacturing process.
Yeah.
So I think the car is great, but that doesn't matter if your business is not sustainable.
Right. My criticism of the car, and it's a similar criticism to the Ford F-150 Lightning, is it's very heavy. I forget that maybe it was 7,100 pounds or something like that. And I'm projecting the Cybertruck will be under 5,000 pounds. F-150 Lightning, I think, is 6,900 pounds. An F-150 is around 4,600 pounds or 44, a comparable to the size of the Cybertruck and comparable to the size of the F-150 Lightning. A regular gasoline-powered F-150 is around 4,400 or 4,600 pounds. So you're adding 2,500 pounds to the car.
Yeah.
Or more. And the one of the challenges with Rivian, like, okay, it's good for off-roading. It doesn't have a lot of payload capacity.
It doesn't. And there also seems to be reliability issues, and I'm not sure how widespread these are. And some of it is, just early start of production, you're going to have some issues. But one of the owners who we were talking to on our channel did a road trip right after he took delivery of the vehicle. I think it was from Dallas to Denver or something like that. And he was explaining the story, and it sounded like this trip from hell. Like, he had all these issues. He had to pull over several times. He had charging issues. At one point, his tire like failed somehow, and he had to get like Rivian support. And so he had to do like an unexpected stay over in some little town waiting for Rivian to come out. And then Rivian like physically towed his car to the destination. And so like, that's a horrible customer ownership experience on top of being incredibly expensive for Rivian to kind of manage those sorts of issues.
Right.
So, I'm willing to cut them a little bit of slack because ramping is hard and you find these issues early on in deliveries. But man, that customer experience does not sound great. And that's a lot of cost to try to deal with those issues.
I won't name him, but one of the guys I talked to who's prominent in the Tesla community, and he knows people inside both Lucid and Rivian, he said that both Lucid and Rivian made the mistake, even Arcimoto made this mistake, that their vehicles are too complicated. That one of the challenges, if you're going to manufacture at scale, you need your vehicles simple to manufacture. And one of the really big edges that Tesla figured out was, how can we make this vehicle as simple as possible? And I think they've got that. I think they figured that out. And that's the weight of the vehicle is an indicator of how complicated the vehicle is. If the vehicle weighs 7,100 pounds or 2,500 pounds more than a Ford F-150, then there's a heck of a lot going on. And it's not even as big as a Ford F-150, the Rivian. So what is going on inside this car that makes it so heavy? that kind of like that get on the factory floor guy and go in deep into the engineering and figure out how can we make this thing more efficient. There's something going on there that they're not getting. So, but
That is,
go ahead.
I was going to say that is a hugely underrated point that you're making. So, like the guys were talking about the suspension, the guys that we interviewed about the suspension and how great it was, and then they've got like this little fold out nook where you can like put a snowboard underneath the thing, and you can actually sit on the flap that opens up, and you can do like a cooking apparatus that hooks on. So there's all these really cool. It's like a Swiss Army knife, right? There's all these little things you can pull out. And that sounds amazing. And it's probably great for the ownership experience. But RJ Scringe had this tweet a while ago saying, like, we're going to introduce, I think it was a dual motor variant of maybe it was the R1S or the R1T. And Elon just responded to that saying the negative gross margins are going to be staggering. And that was actually before they reported their earnings, which was the minus 700%, gross margin that they posted for their for Q4. But it's so true that the more little Swiss Army knife, little nail files comes out over here, it has huge implications for manufacturing complexity and for gross margins.
It's funny because I have this pod car startup that I'm working on. I'm now talking to 3 different people about building my first prototype, and whenever I talk to people about my pod car, they're like, "Well, what if maybe you could make one that does this? Like, could you make it wheelchair accessible? Could you make it like tow? Could you make it, have seat 2 people instead of 1? It's like, stop making my vehicle more complicated. I'm making it as simple as possible. Well, actually, one of the prototype builders I was talking to was like, well, maybe we could put in a removable steering wheel. Like, no, it's going to be a remote control because ultimately it's going to be self-driving, right? So we're going to have a remote control. There's going to be no steering wheel and no pedals. Like, well, maybe we can make it removable. No, that's complicated. We're making it simple. Damn it, I want it as simple as possible.
Your shirt is very apt.
I think there's something with a lot of engineers and people who make things. There's this inherent desire to add features.
Yeah.
And when you come in and say, no, I don't, like everybody's asking me, Warren, is it going to have air conditioning? Why the hell would it have air conditioning? When I was a kid, we didn't have air conditioning in our cars. What are you talking about? How much complexity does it add to put an air conditioner in the car?
Yeah.
And I feel now, obviously, for Rivian, for a modern $80,000 pickup truck, you got to have air conditioning. But I just feel like, when you're building this thing, you get all these people saying, it would be really cool if you had this. It'd be really cool if you had that. And if you don't have a pure vision of what you want to do, and you don't have the strength to stick to your pure vision, you end up with the Swiss Army knife with like massive complexity, and it becomes a lot harder to manufacture at scale.
Yeah, it reminds me of this quote. Most people say, if it ain't broke, don't fix it. But engineers say, if it ain't broke, it doesn't have enough features.
It doesn't.
So I think there's like a little bit of that going on where it's like, oh, like Tesla, they're great cars, but they're so minimalist. So we need to add, 15 other bells and whistles. Okay, well, good luck with that.
We got to have this like expensive display on the interior of the car. And I how often I look at the display? I'm looking at the road. I'm not looking at the display.
Yeah.
They put all this stuff in there because you can.
Yeah.
It adds unnecessary complexity. All right. So are there any other EV startups in the same space as Lucid and Rivian operating that you've noticed that stand out to you?
No, I mean, so I haven't done as deep of a dive on other ones. It seems kind of clear to me, though, that like NIO and maybe to a lesser extent BYD, they've got some history of actually producing cars at scale. Yeah. So to me, they seem much more obvious as winners, but I think we've maybe got a little bit of a Western centric view where we're spending a lot more time looking at Rivian, looking at Lucid and that sort of thing.
Isn't it hard to get reliable numbers for companies like NIO and BYD because their accounting standards are different, and Chinese companies don't always have a great history of being honest with their numbers?
So with I believe NIO's listed on the New York Stock Exchange, if I'm not mistaken. So I think they have to actually adhere to GAAP accounting standards.
Yeah.
So there is that. So they're audited. That's a little bit more trustworthy. But yeah, I mean, if you were to go like Taylor Ogan, he's another hedge fund manager. He's super bullish on all these small Chinese startups like Xpeng and lots of other ones. I'm not as familiar with them.
Is he really a
But
hedge fund manager, or is it just his own money?
he won't disclose what the AUM is, so what the assets under management is. So I don't know. I've liked to have, we've had Taylor on our channel, and I like to have like a, what am I missing about full self-driving, or why is Tesla wrong? But I found the arguments very weak. So
you know his family history, right?
I don't. I feel like I'm about to step in something. What I don't know his family
He's
history.
descended from, his ancestors are both Merrill and Lynch. He's a grandchild of
Oh, I
both
didn't know
Merrill. I think he's a child of Merrill and Lynch's brother.
Did not know that. Wow.
Yeah, his mother. I think his mother is the product of Merrill and Lynch's brother. So, I mean, that's got to be the biggest trust fund I've ever seen. How big is that trust fund?
Yeah.
When your grandparents are Merrill and Lynch. So, no,
It's
I
gotta
like
be pretty
Taylor. I think Taylor's fun to watch. I think he doesn't make a lot of sense sometimes. But when I look at NIO, I want to go back to NIO for a second. They have this battery swap thing. Have you paid attention to that at all?
I've seen it a little bit. I'm not. I've not been following the company in the last 12 months. I really haven't been paying too much attention.
I made a video a while back, and I get an endless stream of criticism from NIO fans that I'm wrong about battery swap. And my response is, all right, how much does it really cost to build this battery swap station? And people say, well, it swaps the battery in 3 minutes, and it's really probably 5 minutes in terms of, pulling in and backing out or whatever. So let's say it's 5 minutes. So let's say you can do 12 cars an hour. Well, and let's say I think it takes up like 3 parking spots. Okay, so it takes up less space, but for the cost of building this thing, how many superchargers could you put out there? And what's the throughput of a supercharger? So if a supercharger does 2 vehicles an hour, and I think you probably do 3 vehicles an hour in a supercharger, and you do 6 superchargers, you're doing 12 to 18 vehicles an hour. You're doing more vehicles for less money. And then you have this other problem with the swap that you have to have extra batteries.
Right.
In an age of battery shortages, it means you can make less vehicles because you have to stock batteries in your charging in your swap station. And if you're going to do 12 batteries an hour, well, then you've got to have 12 batteries ready to go. Or if you're going to do 12 cars an hour as your throughput, well, then you have to have 12 battery packs waiting. And my biggest concern is, like, you can't do structural pack and have battery swap. You can't swap out the structural battery pack. It's not going to win. Somebody was like, well, you just have to do a list of this. No, structural means it's welded.
No. Yeah, no, that's not possible.
And, if you have significant engineering, you can't make significant engineering changes to your car because then the battery swap station might not be able to handle those changes. So I think I understand the sense of like land is really expensive or something like that. So if you can build a solution that takes up less land, but I just fundamentally think it's not a good solution. And just deploying more charging is a much better solution.
Yeah, I mean, when you look at what Tesla's done with the V3 supercharger, that pretty much solves the problem. I mean, yeah, I've done road trips like the V2 supercharging. It's admittedly like not a super pleasant experience when you got to like sit in your car for like 30, 40 minutes. That's a little bit too long. But if you're doing a long road trip and you can be, like 20% to 70% in 15 minutes, that's all you need. Because like by the time you've been driving for 2 hours, you just go to the bathroom.
Wait, you don't push it to 10?
Grab a coffee.
You don't push it to 10%?
No, I did 10% actually. I don't know. I mean, I've only done one road trip, honestly. So I actually don't have a huge number of miles on mine. But
I've started pushing it to 5%. Thing is, it charges faster when the battery's low. So if you want to make your trip faster, then you want to go down to 5% and then charge to 60. And then, 60 or 70, whatever. And it's amazing how fast it goes from like 5 to 50. On a V3 supercharger. It's like really, really. There's a V3 supercharger in West Palm Beach. It's like the West Palm Beach outlet, some like outlet mall. And I parked, and I was low. I was like, 5% or something like that. And I'm on my way home. When I get home, I'm going to charge at home. So I don't really need to charge that much. And I walk in, I go to the bathroom, quick, and I get a sandwich, and I'm eating the sandwich, and I look, and it's like, oh my God, it's it's already like 60%. Like I didn't do that much. I didn't walk very far. It maybe I was, 10 or 15 minutes and it was like it charged so fast. It charged faster than I
Yeah.
expected. So
Yeah, but so the point is like that's so much more capital efficient, and it gives you the freedom to change the form factor like you were talking about, and you don't have to double build the batteries. And it's not like the incremental convenience you're getting of, okay, so you've got a fully charged battery if you do the battery swap. How much better does that make your ownership experience compared to a V3 supercharger? I would argue that's like a very small change on the asymptote of customer happiness, at least with the charging experience.
Well, and what if you show up to the swap station and there's a line?
Yeah.
It sounds good that you're gonna charge in 5 minutes, but if you got to wait 30 minutes in the line, then you didn't gain anything.
And then you've got the issue to that point of you've got to do some sort of analysis of, okay, how many spare batteries are we going to have at the station and how long does it take to charge them? Because maybe you've got enough for 95% of cases, but on those busiest days when there's a line like you're saying and people are swapping out, well, if you don't have enough batteries, it doesn't matter how fast the swap is if it still takes, say, an hour to charge.
Right.
So I don't know how they manage that.
Yeah, that's a challenge too. So you had Taylor on. Taylor's a big proponent of BYD. How much have you looked at BYD?
Not too much, honestly. I've looked at their financials a couple times, and like they seem reasonably okay. Warren Buffett was a big early investor, and so maybe that colored my perception of them a little bit. But like they're products I just don't think are super inspiring. I think some of the stuff they're doing, like on the buses, that sort of thing, like the market needs that. So I'm glad they're out there doing it. But I haven't seen like the bull case explained really well, where it says, okay, here's how they're going to expand in their margins. Cause like they don't have what Tesla has with the operating leverage, where, they've just continued to really increase that top line sales over time, and their operating expenses have been roughly flat, and so then you're getting this huge amount of operating leverage. They've done really well, but it's not as compelling to me on the upside potential.
All right, so one last thing I'll ask you about before I'll let you go. I want to thank you for your time, but what are your thoughts on Tesla going forward? Let's say Q2 is coming. We've had these issues in Shanghai. Do you think deliveries will be less than 300,000 vehicles for Q2?
I think so. So I don't. Elon made some comment. I forget his exact wording, but he said something to the effect of they hope to be roughly as roughly on par with Q1, right? Okay. In terms of deliveries. I don't see how they get there. So I think most people I've been seeing are kind of looking at like 260,000 for deliveries, somewhere in that neighborhood. That's kind of what I'm thinking as well. I think it'll be a decent step back. But I also think the market is probably expecting such a disaster for Q2 that if they do surprise, I think if they actually hit 300,000 deliveries and had anything close to $3 in EPS again, the market would be like completely shocked. So I don't know if they can do that, but if they do, I think there's probably more upside potential than downside in the near term from my point of view. But
what are your expectations for deliveries from Giga Texas and Giga Berlin going forward, or let's say Q2, Q3, and Q4?
I think they're going to be pretty small, probably in particular out of Texas. From what I've been seeing, Berlin seems to be ramping a little bit faster. But I don't think it'll be more than, say, like, I don't think combined you'll get 100,000 vehicles this year out of those factories. Okay. I hope I'm wrong, but I just think we're kind of in the early stage of the S curve. Plus, you've got supply chain issues. But I'm curious. What do you think?
Well, I thought they said that I think they're targeting, I don't remember whether it's 5,000 vehicles a week by the end of the year for both factories, or maybe it was 10,000 vehicles a year. For each factory. I think it was 5,000 vehicles a week by the end of the year. And maybe they were going for 10,000 vehicles a week by the end of the year for each factory. So if they can get to 10,000 vehicles a week by the end of the year, then the third quarter should be big.
Well, I think third quarter and fourth quarter.
Sorry, fourth quarter should be really big.
Well, I think they'll both be really big, honestly. Because Shanghai's still expanding. We got to keep that in mind too. Like Q2, yeah, you're going to have some issues, and probably gross margin comes down a little bit sequentially. But by the time they kind of get back on their feet, and you've got price increases, finally coming through to deliveries, like there's just so many catalysts. And I mean, as you know, I love doing the financial modeling on all this, and I don't understand how Wall Street is so wrong. I was looking at like 2025 estimates for Tesla, and I think for 2025 the Wall Street average was earnings per share of $22. Yeah. And I'm like, guys, like next year is probably going to be $22 or maybe even more.
No, next year's going to be 30.
25 is my base case projection
for $30 a share. So let me, you tweaked something in me that I've been talking to other people about, and it really stands out to me is, I think we look at you and I look at the long term, and we say, look where Tesla's going to be in 5 years and 10 years. And like, oh my God, this is an insane bargain at this price. Mm-hmm. And I have this view that long-term investors are not decisive in short-term stock price. That short-term stock price is determined by, so I believe there are long-term investors, and there's no such thing as a short-term investor. You're either a long-term investor or you're a trader. Right. Okay. So the traders are trading every day. They're determining the stock price. I'm a long-term investor. I haven't had a transaction with Tesla in months, right? So I have no significant influence over the stock price on a day-to-day basis. So it's the traders who are looking at like technical analysis and rumors and, short-term news, and they don't care what's going to happen in 2025. And it's only when the stock price falls enough, and then you have some event, right? Like, let's suppose Q2 is a positive surprise. And there's like pools of long-term investors out there, or they get, what is it called? Moody's gives them like a investment grade
credit rating upgrade. Yeah.
There are certain moments where certain long-term investors have been sitting on the sidelines waiting for the right moment, and then that's when they buy. And all of a sudden, there's this surge of cash that comes into stock, and it raises the stock to a higher level. And now the short-term traders get overwhelmed.
Mm-hmm.
What do you think about that depiction of, that the daily stock price is driven by traders, and the long-term investor influence is, takes a long time to filter into the actual stock price?
I think that's true to a certain extent, but I think you also have a lot of institutional flows. So if you look at what's happened this year, obviously like macro is on everybody's mind. And so, the institutional investors have a lot larger balance sheet than you or I do. And so I think they're much more capable of moving the stock price. And I think what you've seen is, my traditional financial background tells me, okay, equity risk premium and the risk-free rate have increased drastically in the last 6 months or so. And that tells you that longer duration stocks like Tesla, growth stocks, should be valued lower. So all the traditional players who maybe they own, $10 billion or $1 billion worth of Tesla, let's say, they say, okay, well, my valuation model is telling me that the stock price should go down based on this new macro data. And so I'm going to go out of Tesla and say into a utility stock or something like that, which companies view as safer. So the funny thing is, if you look at, I had a tweet about this earlier. If you look at like the PEG ratio of some utility stocks, which is the price to earnings divided by the long-term growth ratio, for those who are not familiar, those are trading at pegs of like 3 to 4. Whereas Tesla, by Wall Street standards, I think is at like a 1.5 or 2 or something like that. By my own math, it's closer to a 1 or maybe even a little under 1, which just screams that Tesla's undervalued. But with the models and the way that institutional capital looks at the market, they think that the current moves make sense given how you value companies. But I think what's going to happen is that Tesla continues to execute the way that you and I both believe that they will. Then all of a sudden you're going to have, the earnings part of that equation just continue to tick up way faster than people think. And so even if multiples are compressed in the way that their institutional models tell them it should be, even with those compressed multiples, the stock's going to have to go to higher. Now, this is not investment advice, but that's just kind of my view of I think institutional flows probably explain a lot more than maybe like traders or hedge funds. Now, granted, they're both involved, but I think with what we've seen, the scale of the movements. I don't think that's necessarily completely explained just by traders.
Okay, so you brought up macro, and this is something that's been bothering me for a while. I look at the macro circumstances and I say, okay, we got inflation. We've got supply chain issues, whatever. What did we see for the last 2 years with like a crisis situation? Tesla grew very fast and became a lot more profitable. Well, what's likely to happen for the next couple of years? Well, we've got some potential economic crisis situation. What's Tesla likely to do? Tesla's likely to grow fast and become even more profitable. And I look at it and I say, okay, you've got $1 billion in Tesla stock and you're going to sell it. What asset are you going to buy that's a better bet for the future than Tesla? And you certainly don't holding cash in an inflationary environment doesn't make any sense, right?
Right.
So, okay, utility stocks, they're pretty reliably going to earn revenue and make some profits, but they're not likely to grow significantly.
Yeah, well, which is why the peg is so high, because they're a lot of these utility stocks, they have PEs of like 25, 30, something like that, but their earnings is capped by regulation at roughly 7% per year, somewhere in that neighborhood. So, it's like, okay, you've got a PE of 28, let's say, and your earnings growth of 7%, which you cannot exceed. It's not possible. You will get slapped in the wrist if you do that. So that's a peg of 4. So it's like the utility stocks can't really go higher than they are right now.
I would say in a sense, like, you could buy bonds, and let's say your bond is paying 4%.
Yeah.
But if inflation's 8%, you're losing money.
You're losing. Yep.
And a utility stock is paying a dividend. Maybe they're paying a 5% dividend. Well, if inflation's 8%, you're losing money.
Yep.
And if you buy a stock like Tesla, and I struggle to think of another company that's this predictably strong, you can see the growth. It's growing faster than 8% a year. And yeah, there's going to be some volatility. I also think there's this issue of there's a distinction between volatility and risk, right?
Yes.
The stock price moves up and down a lot, but the long-term risk profile for me, when I look at Tesla, is, well, they're making a lot of profits. They're making their vehicles at much higher margins than everybody else. They're scaling production better than anybody else. They're growing faster than everybody else. What's the downside of this story that I'm missing from Wall Street's perspective? What am I not seeing that Wall Street sees?
I completely agree with that perspective, Warren. And to kind of go back to utility stocks, which I've got a background in energy, so I'm kind of keenly aware or keenly interested in seeing how this plays out. I see risk in the utility sector is that those companies are selling kilowatt hours at about 3 to 5 times what it costs to generate via solar on your own house, on your own roof. So that's, to me, is a huge red flag of risk. How sustainable is that business model when solar costs are going down, and with the way that utility rates are structured, they can only go up year after year for the most part.
Okay, you just prompted another question.
So that's risk. And Tesla, I agree with you, is more likely to thrive in this environment. So that's where I like to put my money.
That prompts another question for me that's not limited solely to Tesla, but why isn't solar ramping faster worldwide? Why aren't we seeing a lot more solar going up a lot faster?
Well, it is. I mean, if you look at the statistics, it's ramping really quickly, actually. I think it maybe doesn't seem like that because it's still such a small piece of the pie. But like if you look at like I forget which EIA, I think it is, the Energy Information Administration in the United States. They've got data that they publish every year on the growth of solar and wind, and they're really ramping quite drastically. But there's only so much solar capacity worldwide, and it's increasing at a pretty drastic rate. But trying to replace the whole worldwide fleet of generation is going to take decades, even if it's growing exponentially.
Is the solar panel industry affected by the supply chain issues that are affecting everybody else, or are they not really limited by it?
I think so. I think they've got big issues with inverters, I believe. Now, I've not been following them as closely as I used to, but there's a lot of chips and components like that I'm sure are impacting their supply chains as well.
Okay, and then Tesla has the Megapack factory in Lathrop, California. I thought they said they'd completed the factory. When is that going to start delivering?
I don't know. They've been so light on the details with that. It was like this announcement buried in one of the, I think it was the Q4 letter. It said, "Oh, we're going to do 10 gigawatt hours a year," and I'm like, "Wait, what?
No, no,
That's a
40.
was it 40? I thought it was 10.
In the
No, no,
Q,
no. You're right. You're right. It was 40. You're right.
in
Yeah.
the impact report, maybe it was. I don't
No,
know if
you're
it was the
right. It
impact
was
report or the
40.
Q1.
I think it was Q4 actually.
But in the impact report, they said that, right now they're doing 4 gigawatt hours a year, and they're about to open a Lathrop factory that's going to be delivering 40 gigawatt hours a year. And
Right.
I think you would probably agree with me that the demand for Megapack is far more than 40 gigawatt hours a year.
Yeah, it is. But I think people don't realize how big that is. I mean, that's bigger than Giga Nevada. It's a huge amount of batteries. And so like for years, people have just been criticizing Tesla Energy because it's not growing and the margins aren't there. And like, okay, this is a long game. Like I'm kind of comfortable with where Tesla is on the energy side because you need to get the product right first. And I think they're going to do that. But you're right.
You need to get the product right, and then you need to get once you think you've got the product right, you've got to look at how you're manufacturing and like, okay, what if we change the product this way, this way, and this way, and then we could manufacture it a lot more efficiently. But on Megapack, one of the things that really stands out to me, I've looked at Megapack, and my own math is it's potentially a greater than 50% margin product. And the reason I say that is if you take a 3 megawatt, I think we're going to see different versions of Megapack coming out of this factory. But if you take a hypothetical Megapack that's got 3 megawatt hours of battery cells, and let's say they're lithium iron phosphate cells at $50 a kilowatt hour, which is, I think, where lithium iron phosphate may be getting more expensive, but I think aspirationally, lithium iron phosphate cells are going to be $50 a kilowatt hour for Tesla's cost purchased at scale.
Mm-hmm.
Well, that's $150,000 for the battery pack, and that's probably the most expensive part of the mega pack. So is it crazy to think that their cost of building a mega pack might be $300,000 and they sell it for $1 million?
Yeah, I'd have to check some math on that, but that doesn't seem right to me. I mean,
because that would be a 70% gross margin.
yeah, I'm highly suspect of that. I mean, there are a lot of other components. I mean, you need inverters, you need
Yeah.
racking, you need the casing. There's delivery charges. There's a
Racking
decent amount
doesn't
of
cost
mana.
much. Come on. Delivery charge, installation, but if you're installing, 100 of them or 10 of them,
Mm-hmm.
of course you're getting you're giving discounts when you're delivering 100 of them, but
So, but they're not selling those. They're selling those for what, like 100? Is it 150 a kilowatt hour or 200 a kilowatt hour right now? On
pricing
the
that I
revenue
saw was over $1
pricing
million.
on 3 gigawatt hours
The 3
or
megawatt hour mega pack,
megawatt hours.
the pricing that I saw was more than $1 million, and my guess would be pricing is going up. Right? I mean, there's effectively unlimited demand, and we're in an inflationary environment. They can probably charge more for them. I thought I saw some video where they were presenting, and I think it's around $1 to $1.2 million for a mega pack. And I'm sure that if you order 10 of them, or if you order 100 of them, they're probably giving you a discount, right? But
Mm-hmm.
I certainly think all right, maybe my numbers are off, and maybe it's a 50% margin, 50% gross margin. That's still crazy good.
Yeah, my thinking is we would have seen that by now.
No, because they're
Showing
not
up in there.
manufacturing at scale yet.
All right, that's a fair point. I also
And
don't think there's
I don't think they
unlimited-
break down. I don't think they break down gross margin for energy. They break down gross margin for vehicles. I don't think they break down for energy.
But you can compare the you can roughly get into it because they disclose the megawatts of solar they've deployed and the megawatt hours of energy storage that they've deployed.
Yeah, but you don't
And
know
so you
how
can-
much of that's Powerwall, how much of that's Megapack. It's not broken
Sure, but-
down between solar and mega. So it's really hard to break out Megapack.
But you can
from
do
that.
a blended because the pricing between Powerwall and Megapack, it's somewhere like maybe it's $250 a kilowatt hour or something like that. It would be a blended average. You can make some reasonable assumption and you'll be at least within plus or minus 50%.
Right.
And so then you can do the same thing on solar and assume a dollar per kilowatt and so you can at least get relatively close to it. And it seems to me that energy storage is the kind of leading revenue source for Tesla Energy right now.
Right. I just
The
think
other thing
I think what's coming is that's the whole point about you can make the product and get the product right, but then you get the manufacturing right, and you got to back and forth on your engineering. I think that once you start the idea of the Lathrop Megapack factory, I think is okay. Now we figured out how to manufacture this thing at scale for lower cost, and that's what's coming. And I think there's new versions of Megapack coming. There may be new versions of Powerwall coming with lithium iron phosphate, because lithium iron phosphate is going to be easier to access supply, right? Because CATL is ramping production of lithium iron phosphate. Do you think there's any prospect for lithium iron phosphate battery cell manufacturing in the U.S.? Have you seen any indication that's going to happen?
I haven't. I mean, it seems like it would make sense to. I mean, shipping iron across the sea is, expensive. So I would hope they do, but I'm just not sure, to be honest with you.
Okay. All right. Any closing thoughts? We've been going for an hour and a half, I think. We should probably let this go. Do you have any closing thoughts before we wrap this up?
Yeah, I mean, just one kind of maybe closing thought on the energy side, because I did used to manage wind farms, and I've priced out batteries and kind of run models on what would it take for us as a independent power producer to make money on batteries. And with pricing, at least as of like 3 or 4 years ago when I was doing this, it was a lower than our cost of capital project. So like it would be like a 4% IRR if the cost of capital was 6% or something like that. So
IRR
a negative
investment rate of return?
Internal rate of return. So if your internal rate of return is lower than your cost of capital, then you're essentially losing money on that investment. So what I was seeing doing this analysis and talking to others within the industry is that at prevailing prices for battery storage, people were willing to essentially lose money, have invest in a negative net present value project, just because they know batteries are kind of the future and the price is going to come down. So they were willing to, take that loss just to learn. But I would just be cautious of assuming that there's some huge tidal wave of demand just because Tesla's current backlog is so large and they've been able to deliver for so long. So I do think in order to truly scale, they're going to need to drastically reduce prices on battery storage projects.
Well, isn't it though that you can't make the solar farm work unless you have the battery backup?
No, because you can just sell to the grid and take the power pricing of the real-time power risk. So the issue that you run into sometimes is, well, there's so much solar being generated right now that prices turn negative because there's more supply than there is demand. And so then you're losing money. So then the battery would come in and you say, okay, you can smooth that out and you can, buy when prices are low, charge your batteries, and then, or it's just divert your excess generation to the batteries. And then you can, empty the batteries when prices are highest. So that kind of makes sense on purpose. But having run actual models where I use real data for every single 5-minute interval of a year and say, okay, with this, all these arbitrage opportunities and even adding on some other opportunities that are out there, if you take a 3 megawatt hour battery and account for the round trip efficiency and everything like that, it's not as compelling of a financial result as I think a lot of people might think that it is.
And auto bidder doesn't make a huge difference in that? Tesla's auto bidder software?
Well, it's just doing the same thing, but automated. So I think you need auto bidder to do that because like the pricing comes in 5-minute intervals, like I was saying, in wholesale markets. So, you and I are sitting here right now and the grid operator is going to say, okay, at 11:40, which is 5 minutes from now, the price is going to jump, $10 a megawatt hour. You and I can't manage that. It's so inefficient for us to try to say, okay, now I've got to go in and, change the dynamics of our battery. So you need something that's going to automate that process using real-time inputs to, dictate the what's called the SCADA system on these plants that actually changes the physical output. There's not great software that does that marries the grid data with the kind of SCADA data right now. So I think Tesla's got something really valuable there. But to me, that's just kind of table stakes. You need that type of efficiency. But even when I was assuming in that modeling that I was telling you about, I was assuming that we could handle that and that we could make all those decisions in real time, even though the software didn't exist. And with that data, I was seeing the returns were, like 4% per year, just not anything to write home about.
All right. So I'm going to wrap this up. Matt, thank you. Matt Smith, thank you very much for coming on. Good Soil Investment Management, link to Good Soil Investment Management in the description below. Please check out my other videos. Check out the t-shirts on elonbits.com. Support this channel on the Locals platform, Patreon, or as a YouTube channel member. And thank you so much for watching.